However, these two markets are not connected, with stocks saying, okay, cash burn, low cash cushion, out to the woodshed, and the Magnificent Six, not seeing any worries at all until recently. The S&P and equity markets are drawing differences, and now we are. According to the high-yield market, there is no genuine risk associated with the cash cushion argument. I have already examined commodity prices as an indicator to see if the bond market is correct. We've said it for a long time, but I'll conclude by saying that while deflation is a worry, there are other risks as well, is also an opportunity. Technology-related deflation and cost reductions will lead to growth explosions and the creation of a wide range of new occupations that are currently unthinkable. The internal combustion engine is one of the many disruptive people who haven't been able to keep up with the changes. Individuals that do not adopt AI with vigor in order to boost their productivity and lower their pricing will be at risk. However, anyone who experiences price deflation, which we believe will happen to many businesses, will embrace new technology that will significantly boost their productivity. And in a recession, that's what always occurs. Innovation becomes popular. Businesses and consumers are willing to alter their practices when they are afraid, and we believe that they are becoming afraid. Therefore, we anticipate a significant increase in the adoption of technology in the years to come, particularly in the area of artificial intelligence. I will therefore end up where we began. AI is still in its very early stages. We believe it to be the most significant general-purpose technological revolution in history. It still has a long way to go. Pace of development has accelerated significantly since the Internet era, when Moore's Law, which states that, in the realm of transistors and semiconductors, the same performance at half the cost every 18 to 24 months was in effect. These days, the modifications take 18 to 24 months to occur. Every 4 months, there are adjustments in performance for the same price. For this reason, we believe it's critical that everyone, whether they work for a company or are a leader in it, consider adopting or utilizing as many of these AI tools as they can in order to boost productivity. There is going to be fierce rivalry. The fastest adopters of these new technologies are going to. All right, let's speak about Nvidia. You read about the quarter, and it was clearly a beat. Year-over-year sales are up 94%, which is a deceleration from the previous 3 quarters, which were simply spectacular. Of course, 94% year-over-year growth is fantastic. What do you think, though? Assuming, for example, that it was down somewhat today due to extremely high expectations, this was a huge quarter for Nvidia. Isn't that correct? The most important lesson from the call, in my opinion, is that Nvidia is the engine that powers the planet. AI is booming, as Jensen stated. This is a multi-year occurrence, he added. This is about more than simply AI training. It's about rebuilding the entire x86 architecture of the world, including all CPU-based applications on GPUs that are running machine learning over the next 3 or 4 years. Therefore, I believe that the industry will need to come to terms with the fact that this isn't about training clusters in 2025. This relates to GPU data centers that will be constructed in 2026 and 2027. Our numbers then appeared for us. You witnessed that. Sell-side analysts, in my opinion, adopted their price objectives for the stock. We purchased it this morning while it was down, pre-market. Indeed, I believe it was a groundbreaking report. Additionally, I believe it is obvious to me that the global Nvidias will continue to increase their market share, while the Intels will continue to lose market share. Additionally, you must have Nvidia in your portfolio if you wish to wager on the tailwinds related to AI. All right. So after making a small purchase this morning, you are now in second place, right? What did you think of the quarter, Josh? Since you have been in this stock for a very long time, you are undoubtedly well known. The way they kept everyone excited about Blackwell's potential, where orders stand, the fact that demand is still exceeding supply, was, in my opinion, really artistic. However, they didn't increase the level of enthusiasm to the point where they would be unable to win when they report again, and it will be the company's primary responsibility moving forward. It is currently the world's largest market cap firm. In the world, it is currently the most essential stock. They don't have to keep pushing themselves to perform better and better and better. Therefore, it's more difficult than it seems since the revolution is real, and they do have a very bright future. Furthermore, it is indisputable that GPUs will continue to dominate data centers in the future and that they will hold a significant portion of the market in this revolution. They must now provide people with realistic guidance, execute, ship products, and meet those numbers each quarter. However, they must avoid putting themselves in a situation where they are unable to leave, where the market expects them to double their revenue annually, which is obviously not possible mathematically. Everything is going okay so far. I believe Jensen is aware of the goal. Based on what I heard last night, I believe he has accepted the mission. The concept of the moat is the most crucial. And I'd love to hear Brad's response to this. Since rivals are entering the market with fresh ideas, production of Amazon's own Trainium 2 chips is increasing. They won't always have the entire market to themselves. However, they are able to hold on to their supremacy, and the ecosystem may benefit from more products available. That, I believe, was the mood established last night. Additionally, I believe that other Nvidia longs heard the same thing I did. What are your thoughts? That's all about the installed base concept, which we've heard Jensen discuss previously, essentially in the same way, and I believe I've already stated this, that we consider it similarly to how we think of Apple, with its own kind of strong installed base. Listen, the stock began the year at between $49 and $50 per share. We're at $145 or something today. Everyone has this wall of worry. Isn't that part of the reason the asymmetry is closed? Amazon will have its own Trainium chip, along with custom ASICs. They will undoubtedly employ Trainium, as I stated in our most recent BG2 episode, as a less expensive option for some clients. However, Jassy has also stated that he intends to purchase as much Nvidia as possible for as long as he can remember. They are aware that Nvidia powers the globe. Listen up, when we look at our price target for Nvidia next year, it's up 30% rather than 100% as it was at the beginning of 2023 or 2024. As a portfolio manager, I would say that we reduced the size of our holding. We started the year in a rather unusual position. Prior to this quarter, the position was of a typical size, and we are slightly increasing the pullback this quarter. However, for the next few years, we believe it will be a terrific compounder and a great bet on both AI and the replacement, the switch from x86 to GPU-based data centers. Please let me know if you require any further adjustments.